In quantitative trading, the choice and formulation of trading strategies is very important. Many people see parameters as the key factor in determining a trading strategy, but that is not the case. Strategy logic itself is fundamental. Parameters have very large limitations in trading strategies, usually reflected in the following 3 points. First, the dependence on the historical data. The parameters were obtained by the analysis and optimization of the historical data, and the historical data do not fully predict the future market situation. The market is dynamically changing, and new events and circumstances may undermine parameters optimized based on historical data. For example, a certain trading strategy has achieved good returns in the past according to specific parameter settings, but as the market environment changes, these parameters may no longer apply, leading to poor strategy performance. Second, the risk of overfitting. During the parameter optimization process, there is the risk of overfitting. Any strategy can always find a set of parameters that perform perfectly within a certain historical data and a specific time period. When traders overpursue the optimization of parameters and try to make the strategy perfect on historical data, they are likely to fall into the trap of overfitting. This strategy often does not consistently yield good returns in real trading. Third, instability of the parameters. Changes in the market conditions can lead to changes in the validity of the parameters. Different market cycles and changes in external factors may make the originally effective parameters no longer applicable. For example, in a volatile market, some parameters may lead the trading strategy to frequently trigger trading signals, but in a trend market, these parameters may make the strategy too conservative and miss trading opportunities. Therefore, the parameters are not fundamental. When designing a quantitative trading model strategy, we pay the most attention to the strategic logic itself. We believe that the strategic logic is the key factor. First, provide a stable decision-making framework. Strategy logic is the core of trading strategy, which provides a stable decision-making framework for traders. No matter how market conditions change, strategic logic can help traders make relatively reasonable decisions. For example, a trading strategy based on trend tracking. The logic is to follow the trend of a clear trend in the market. This logic has certain applicability in different market environment because the market trend is a more common phenomenon. Second, adapt to the different market conditions. Good strategic logic can adapt to different market conditions. It does not rely on a specific parameter setting, but through the understanding and grasp of the nature of the market, to develop the corresponding trading strategy. For example, a strategic logic based on value investing focuses on the relationship between the intrinsic value of an asset and the market price, whether the market is in a bull, bear, or volatile market. As long as the intrinsic value of the asset is undervalued, you can consider buying. This strategic logic can provide the decision basis for traders in different market conditions. Third, the potential to reduce risk and improve returns. Reasonable strategy logic usually considers a balance between risk management and benefit objectives. It can help traders to pursue reasonable returns under the premise of controlling risks. For example, a strategic logic that adopts diversification and stop-loss mechanisms can effectively reduce the risk of a single transaction, while increasing the potential of overall returns through reasonable asset allocation and trading decisions. To sum up, although parameters play a certain role in trading strategy, they are not the decisive factor in determining the quality of trading strategy. In contrast, strategic logic is more important. It provides a stable decision-making framework for trading strategies, which can adapt to different market conditions, and has the potential to reduce risks and improve returns. When formulating and choosing trading strategies, traders should pay more attention to the rationality and effectiveness of strategic logic, rather than relying too much on the optimization of parameters. That's true of our quantification. Our strategy is centered on the logic itself. During the use process, Even transforming some parameters will not have a huge impact on the results, even in different trades without changing the parameters. Truly do with the same should be 10 change.